Hi, this is Valerie Hunter Kelly from the Air Assault team at Keller Williams Realty here in Clarksville, Tennessee. And today our topic is going to be about interest rates. It's a topic everyone always wants to talk about. Whether you're at a cocktail party or you're in the gym, they want to know what's the current interest rates. And we have an expert with us today, Yolanda Stewart, who's been a mortgage loan officer for 17 years and is also a retired military officer. And I brought that up because we work in a military town. And so that's very important that someone understands that. So she'll be talking to us about our topic today. But before we begin, if you're looking to buy a home, then click the home buyers link. But if selling is what you're looking to do, then click the home sellers link. Now back to our topic. Well, again, back to our topic. So our topic today is interest rates, and as I mentioned before, we have Yolanda Stewart with us. So Yolanda, I want to begin by asking that question. What are the current interest rates?
Oh, I'm glad you asked. Well, Valerie, as you know, interest rates are subject to change and they are based on the buyer's individual ability to qualify.
Okay.
But at F&M, the current market, our rates are as low as 3.25
Wow.
for VA and FHA 30-year fixed,
Okay.
and they're as low as 3.75 for conventional 30-year fixed.
Wow.
Yeah, we're
That's
pretty excited about it.
So we heard about interest rates going up. So did interest rates go up?
No, in fact, interest rates have held steady and
Okay.
have dipped down a little bit. In the
Okay.
last like 2 or 3 weeks, the interest rates have dropped quite a bit. So
Okay. So all the things we were hearing in December, rates really did not go up.
they
They held
did not.
steady.
In fact, they have held steady, and folks that have fairly decent credit scores were still able to get great rates.
Mhm.
However, today's market, even buyers with not so great scores, down to credit score of 600, I'm able to offer them a 3.25 interest rate. I know, it's
Wow.
pretty fantastic.
So, and what do you consider a great score? What's a great score?
Well, a great score is anything above 660, or rather, I should say
Okay.
660 or above.
Okay.
That seems to be the threshold with many of our investors, because F&M is a correspondent lender, which really means that we're an extension of some of the nation's largest mortgage servicers. So that positions us to offer their interest rates at a discounted price to our clients.
So is that why, like, sometime I'll call and I notice you're always able to match rates, so you always have the best rate in town. So is that how you're able to do that?
That's
Or
an ancient Chinese secret.
that's
No,
an
I'm
ancient
just
Chinese
kidding.
secret. Okay.
Just kidding. But really, the real answer is this: that us being a correspondent lender with some of the largest mortgage servicers in the nation, the quality of our portfolio, in other words, the quality of loans that we sell to those investors,
Mhm.
positions us at a certain tier as a correspondent lender. So the better quality, the better pricing. So us being able to sell to them great portfolios, in other words, people who don't default,
Okay.
it positions us, and essentially they say, okay, F&M, you're giving us great business, you're going to be able to offer our product at a discounted rate. So that puts us in a position to compete, and in fact we're able to compete with anybody out there.
Okay. So I'm the layperson, you're the surgeon, so you're kind of talking a little bit uh, technical jargon.
Okay.
So let me just clarify really quick. So correspondent lender, people are
Uh-huh.
probably saying, what in the world is a correspondent lender?
Easy
Okay.
answer. Correspondent lender simply means that we have met the criteria for, let's just say, Wells Fargo.
Mhm.
We have met the to function as Wells Fargo's extension. So we're able to offer Wells Fargo's products at a
Okay.
discounted rate. So
Okay.
essentially, correspondent just simply means I'm an extension. You know,
Okay.
we have met their criteria in order to offer their product.
Okay. And that could be Wells Fargo or Bank of America,
Exactly.
whoever, but you've got to have a certain rating within F&M who
Exactly.
offers that to be able. Okay. So I think
Exactly.
our viewers will be able to understand that. And so also, so what are some of the factors that affect interest rates? What should I be worried about when I hear in the market that, oh, maybe I should go buy a house right now because
I
interest rates are
gotcha.
going to go up?
Right. Well, some things that you can control, we'll talk about that affects interest rates, and we'll start with the ones that you can't control. For example, inflation. Inflation affects interest rates.
Okay.
So the lender has to maintain an interest rate that enables them to overcome the erosion of the dollar. So inflation means that the dollar doesn't have enough value.
Okay.
And so we have to maintain a rate. So if inflation is high, then you can expect that the interest rates are going to be high. So that's one. You can't control that. So that's
Okay.
one of the things you can't
So is
control.
inflation low now? Is that why we have low
Inflation
interest rates?
is steady, it's decent, it's acceptable, and you can see that reflective in the interest rates.
Okay.
Okay. And then another one is just demand. So if the demand is high,
Mhm.
interest rates are going to be low.
Okay.
Uh-huh.
Okay. So there's a lot of buyers out in the market.
Excuse me.
Be
The
higher.
total opposite. If demand is high,
Mhm.
then interest rates are going to be high
Okay.
because the market says, okay, people are interested, people are buying, let's capitalize on this.
Okay.
If the demand is low, then
Mhm.
we lower the interest rates because then we need to entice people to come in and buy.
So is that what's happening in the market
That's
now?
exactly
We
what's
still,
happening.
even though it's an active market, we still need more buyers out in the market.
Exactly. You
Okay.
got it. You
Okay.
got it. So
Okay.
with where we are now, the rates are to attract buyers.
Okay. Awesome. And what can a buyer? Buyers are always shopping and they always want to make sure they got the best rate. So if I come and say, look, work with Yolanda because I know she's going to have the best rate. What can a buyer do to assure that they're getting the best rate out there and
Great
they're
question.
comfortable?
Great question. So
Okay.
things that you can control.
Mhm.
So one, shop around.
Okay.
That's always a great, and you shouldn't be afraid to do that because
Okay.
when you shop around and banks compete, you win. That
Okay.
that's the old adage. And also just protecting your credit, being mindful
Okay.
of just the activity, the balances on your credit cards. If you are cautious enough to keep the balances on your credit card at least 50% or less.
Of
When
what
you
the maximum
of the credit limit, exactly,
Yes.
because
Okay.
what happens is it's amazing that when the balance of your credit cards are more than 50% or when they start approaching being maxed out,
Mhm.
it can cause your credit scores to drop up to 100 points. I've seen it.
So even if I'm a great payer, I pay my mortgage every month, but I'm maybe at 75% max, that's a negative thing.
Absolutely.
It could affect my score.
Absolutely.
Very good.
So
Okay.
so just and debt to income ratio is another factor that you should be mindful of in positioning yourself to buy, because some of the investors, when you have a high debt to income ratio, that equates to a high risk.
Okay.
High risk equates to a higher price of money because interest rate is essentially the price of money.
Okay.
So keeping a low debt to income ratio is also something that you can control and put you in a better position to get a great rate.
Okay. So don't go out and buy expensive cars
Right.
and lots of other consumer debt
Right.
because that'll increase your debt to income ratio. So you
Absolutely.
want to do all that afterwards. Don't go buy everything
Absolutely.
for the house before.
Right,
Okay.
right. Wait until
Okay.
the day after you close.
You wait. Okay. And then one last question. So what is your forecast for rates in the upcoming months? What do you think interest rate's going to do? Everybody wants to know that. That's the next big question.
Right, and if I knew spot on, I'd be a wealthy woman. But I can just kind of forecast based on some of the other indicators, and some of the indicators are saying rates are going to kind of hold steady.
Okay.
There's not any projection for them to increase to any significance in the near future. So we're in
Wow.
a great market.
So we think we'll stay in this 3 or whatever. Okay. All right. Very
Yes,
good.
ma'am. That's the prognosis there.
All right. And then just one quick question because I know our time's getting short. So somebody looking at refinancing. So what should be that criteria if they're going to refinance? Because sometimes I get people coming in and they should not have refinanced.
It's the same criteria with exception of this. One, understanding what the market is in terms of the value of your house.
Mhm.
Because if the market has decreased
Mhm.
and maybe your house isn't as valuable as you thought, then
Mhm.
you're not in a great position to refinance.
Okay.
And the debt to income ratio are also factors and things that need to be taken into consideration, unless you're doing a VA interest rate reduction loan. And those types of loans, you don't have to, we don't count debt to income ratio. It is pretty much a streamlined, low documentation type of loan. But the regular loans, it's just the same criteria, understanding what the market is doing and watching what your personal finances are looking like.
Okay. Well, Yolanda, we really appreciate having you in today. And as we were talking, and I kind of threw that little carrot in there about refinancing, and it sounds like we need to have you back just to talk about
It would be my
refinancing,
pleasure to
because
come
that's
back.
another question. Well, anyway, thanks for listening today. If you have any other topics you'd like us to talk about, please feel free to give me a call. You can call me at 931-320-2100 or email me at valerie@valeriehunterkelly.com. And again, if you want to get in touch with Yolanda, and her number is 931-809-0115. And you can also reach her at yolanda.stewart@myfmbank.com. Okay, I got that right. So anyway, we look forward to talking to you next week. And we'll be talking about what's happening in the market and how active the market is. So now that you know about the interest rates, you need to get out there as a buyer or a seller and get that done. And we're going to show that to you in our next video. Have a great week.